Today we're going to talk about kickstarting your career. Did anybody walk out of their 63-hour class with a whole lot of training and feel confident to serve buyers and sellers with the largest financial decision of their life? Anybody? So I'm going to take my nearly 20 years worth of experience and give you just enough to leave with some information to help you feel more confident in what you do and how you serve your clients. So a little bit about me. I think it's important to know who is pouring into you and teaching you, so you have a little bit of trust in me and what I'm sharing with you today. I've been a mortgage loan originator for 12 years. I was a prior realtor, so I know just how hard you have to work to procure a lead, convert them into a client who trusts you, and make it all the way to the closing table with a lot of obstacles along the way, mind you. So I was a former short sale negotiator. I was an assistant to a broker of a really large Keller Williams office in Southwest Florida. I am a published author. My book is called First Home, Where to Start and How to Win. I definitely suggest, as a new realtor, learning as much as you can out of this book. I was recently speaking with a client who took her loan officer class, much like your real estate class. You've got to do the course and take a state exam. And she said that helped her more than the courses she took for her mortgage loan officer training. So it will help you too. It would be unfortunate for your first-time home buyers to know more than you. So this will help jumpstart that for you. I am a podcast host. I have a podcast called Credit Coaching by Christy. I've got about 100 episodes on it so far. So if you want to learn more about credit, I encourage you to subscribe there. It's on every platform, but there's a ton of information in there for you to get well-versed with credit. Because if you have a 400 credit score, can you get a regular mortgage? The answer is no. I'm a certified credit specialist and a certified financial educator. And I have a master's degree in executive management, and I've literally worked with hundreds of families over the years. I did the math over the last 3 years and closed over $100 million in loans. So that was exciting to be able to share that with you. I love to travel. My husband Andrew and I just love to see the world. I serve on 2 boards, and I say that to share with you that if you are not serving as a member of a board of directors, I want to encourage you to. It's the best way to appear as a leader in your community by being able to volunteer some of your time. I am a dog mom, and I love to read. I read about 50 books a year, and the book I want to recommend to you, if you like reading, is called Ninja Selling. It's by Larry Kendall. He is amazing. He's got a YouTube channel as well, and they've got a lot of small little fragmented parts out of the book and YouTube videos that you can digest. There are 42 chapters in here. It's a lot of information, and one of the upcoming classes will be on ninja selling. It can really translate into any industry, which is pretty exciting, but it's specifically written for us realtors. So today we're going to cover how to procure a lead without buying them. I'm sure you've heard of or maybe even considered buying leads like on Zillow or Realtor.com. You would spend thousands of dollars, and the conversion rate is usually somewhere between 1 and 2 out of every 100. I don't know about you. I don't want to speak with 100 people before I could potentially turn that into one transaction. So we're going to talk about better ways there. We're going to talk about a buyer's consultation. I don't know how that hit you, but when I heard about a buyer's consultation when I first entered into this business, it felt a little scary. I'm supposed to give a buyer's consultation. How do I do that? But could you imagine sitting with your doctor or a financial advisor or your accountant and not discussing your bigger goals? They can't give you back information if you don't provide information to them first. And a great buyer's consultation will turn into a higher conversion rate for you. We're going to talk about contract and terms, and then how to overcome those many, many obstacles that might keep us from getting to the closing table. So how do we procure a lead without buying them? So the very first thing that a lot of people out there training will tell you, you start with who you know. Well, what could possibly go wrong? Can we talk about a couple of things that could go wrong? What hits you first? What could go wrong if you work with somebody that you know?
I feel like they think they don't have to pay
Perfect.
a certain amount because you're family, so you should get...
So you might have to discount your income. Oh, that feels terrible. Because are you working just as hard? Maybe not even harder for family? Yeah. What about imposter syndrome? Do you know what I mean by that? You were this one thing, and now you're something different. And you're showing up and you're going, I'm a realtor. Do you have a lot of confidence right out of the gate without much experience under your belt? That would probably show up in how you show up. So let's talk about some of the things that could possibly go wrong. So pros versus cons with working with people that you know. They already know you. That means they already like you. They already trust you, right? They may talk you up to others. If you're family or a dear friend, they might say, oh my gosh, Jamie's working her tail off for me. It's a really tough market right now. There's not a whole lot of inventory, but man, she is hustling, right? They might talk about you more than somebody who doesn't already have a relationship with you. They already feel comfortable, right? So you don't have to necessarily figure out those ways to help build trust. And they might show grace if you make a mistake. Oh, well, she's new, right? What could happen if you drop the ball, if you make a mistake, if something doesn't go according to plan? If that's the case, you've got to know that this person that knows you, they're your guinea pig. And that could be scary. Again, imposter syndrome shows up. So you were this one thing for a lot of years, right? And you're known by your friends and your family as a hairdresser, as a mechanic, as a, fill in the blank. And now you're something totally different. And I think they might know that 63-hour course that you took didn't teach you everything. So they might know you might be struggling with trust in yourself and confidence. You could be risking a relationship if you mess something up. So I'll give you an example because I have been interviewing really successful and long-term realtors. And I asked them, what's the biggest mistake that you learned the hardest way? And one of them had shared this with me. She said to me that she was working with her cousin, who was like almost her best friend. And she didn't put on the paperwork, on the contract properly, enough time for her financing commitment to come through. Well, kind of in the 11th hour, she wound up not getting final approval. And it was past that date on the contract. So she lost her escrow deposit. Do you understand what I mean by that? It was beyond a date. She wasn't protected. And because of that, she lost $5,000. You know what else she lost? That relationship. That cousin intentionally avoids going to family events and gatherings because she doesn't want to see her. I don't know of anything that's worth that cost. They might talk smack about you if something goes wrong, right? They might be the one fueling the fire with the family and the friends. They might take it personally if you mess it up and really sever that relationship. They may ask for a discount of your commission. So now you might even be working harder, right? Putting in a little extra work and cutting your income that you're working really hard for. And then you don't want your friends to feel like you're trying to sell them. You want to go out to happy hour or lunch with your friends. You don't want them to feel like, oh, well, he's just asking me because he wants me to, buy a home through him. So pros and cons of working with somebody you know. So that's where a lot of companies will teach. Just go to the people you know. Let everybody you know that you're in real estate. Well, you could see how there's plenty here that could backfire to you. So what are some other ideas that we could come up with for procuring a lead? So social media is fantastic, but here's my recommendation. Please don't say, I'm in real estate now, so you should buy or sell with me. There's no reason. There's no call to action. There's no confidence there. Why should somebody trust you just because you've got your license? There's 5,000 other people in your community that also have their license. But what if they saw your hustle? What if they saw how hard you're working? What if they saw you checking out brand new construction communities and then talking about it? Hey guys, I want to share with you this new community that's getting built up. And what I love most about it is, right? Talk about the lifestyle, because we're not just buying a home, right? We're buying the community and that neighborhood and that lifestyle. So you could talk about that. You could also give tips. So maybe follow other people in the industry and give tips from them. We recycle information all the time. Almost nothing is your own information, right? We quote people all the time. Give them credit. If you're on TikTok, do a duet with somebody and say, this person knows what the heck they're talking about, if they know what the heck they're talking about. Don't endorse somebody that could now bring down your reputation, right? But what I'm saying is, if you can be that informer, right? And then figure out your niche. If you've got small children at home, maybe talk to those caretakers and parents of those small kids. If you've got a community inside of your church or hobbies, something like that, talk to those people. I had shared with you through my first book that I love to serve first-time homebuyers. And I love that because I can give them that extra time that they need. I take my time explaining the entire process, where somebody who's, got a huge pipeline may not have that kind of time. And then they just feel like cattle getting pushed through, right? Just like another number, another file name. So how do I demonstrate on social media how I do things differently? And that's what I want to pose for you to think about. Networking groups. There are networking groups all over the place. They meet monthly, they may meet weekly, they meet in person, they meet online. Find your people. So you can go on to like Eventbrite, you can go on to meetup.com, and you can just do a Google search on different kinds of networking groups. You might show up someplace and go, oh my gosh, the next hour and a half of my life is going to be terrible. These are not my people. This is not where I belong. This is not what I want to do. But you kind of have to go through, it's like dating, right? You have to go through enough to find your right place, and then get deep into relationships. Get people to know you. I went to this amazing mastermind and about a month ago, and there were 50 people in the room. And it was an assignment of ours to go around and connect with somebody you've never met before. So I go and I meet this guy, Brian. And the task was, we each had 4 minutes to get to know each other, and we can't talk about what we do for business. And it's so funny because the good old-fashioned American way is, hi, my name is Christy, what do you do? And that's just how we go out of the gate. To get to know somebody outside of their identity of who they are in the workplace was amazing. So I got to rattle off 4, 5, 6 things about Brian that had nothing to do with his work. So how did I get to know him? As a person. And that's how I want you to show up, is get to know people as a person. A really good acronym for that is FORD, F-O-R-D. So you could go and introduce yourself to somebody and you can ask them about their family. O is for occupation. So what is it that you do for work? The R is for recreation. So when you're not working, tell me what you do for fun. Do you have hobbies? How do you invest your time? What do you do, on the weekends or whatever? And then D, if you can get there, is dreams. My goodness, you talked so much about traveling. I can't wait to travel. What's your dream vacation, right? Get people to talk about themselves. In Ninja Selling, they talk about time of possession. The time of possession, you want them to have all of it. I have gone through this system before, asking questions, and I didn't say a thing about myself. And at the end of that conversation, you know what somebody says? Man, I really like you. I want to get to know you better. Here's my business card. Let's set a time together. True story. Think about how noisy our world is and how little people get to actually be heard. There are people at home, their closest people don't hear them. So you could really make somebody feel important and special just by going through that acronym. Small groups at church. You could have a small group outside of your networking group, right? You can find your little core group and get deep, or small groups at church or something along those lines. I spelled it wrong, but volunteer. I'm missing a D. Volunteer. Find something that really lights you up. Or better said, find something that makes you angry and be part of the solution. Go out and fix it. Go out and be part of serving what you feel is injustice or wrong. I started serving at my favorite nonprofit, and fast forward to a few years later, I get to serve on the board now and volunteer in a different way. And it was one of my favorite accomplishments of my life, to be able to get there. So volunteer, people get to know you as a giver, right? And you're a giver of your time. The Bible speaks of giving our time, treasure, and talents. So sometimes you need to give all three, or just choose one. Hobbies, talk about that, share it with people, but if you've got hobbies, when I first moved to Central Florida, I knew nobody. So I went on meetup.com and I started putting in all my interests. Well, I love stand-up paddleboarding, and I found a stand-up paddleboard group. So I got to make a few friends out of something that has nothing to do with business. You just want to expand who knows you, right? I love this idea, and I think not enough new agents take advantage of this, and that is other agents' open houses. But don't make it a passive thing, all right? So when you are hosting other people's listings as an open house, you need to ask a few questions of the people walking in to get them to talk. They need to be broad, open-ended questions, and don't chase them around the house. Don't follow them. But what's really important is keep an eye on which room they walk into first. That's the most important to them in their lifestyle. If they head straight for the kitchen, that's what's most important, and try to see if you can figure out who's making the decisions. If they go shooting for the master bedroom or ask where the master is, they don't care about those other rooms, right? Those will take care of themselves. So some of the questions that you can ask is, how long have you been shopping for? When do you need your closing date to be? So you're not asking things about the home you're standing in. You're trying to uncover urgency, motivation, frustration. If they've been looking for a year and writing offer after offer. I've seen some people fire realtors who weren't helping them, but the person at the open house was willing and able and ready to. So you could even say, I work a lot in this community, and I can keep my eyes open if there's going to be another listing should you want to be in this zip code or this neighborhood or whatever. What about other agents' unworked leads? I used to call them rejects, but that sounds mean, doesn't it? So other agents' unworked leads. Maybe they just weren't responsive to another agent. Maybe they weren't able to turn it. Maybe they said, you know what, I've got to re-sign my lease for another year. I can't shop right now. And that agent is getting busy, and then they forget about that person. So ask them to share their database with you and see if you can say, listen, if I work it, I'll give you a referral fee. Let's shake on it and agree on what that dollar amount looks like right now, and put it in writing. But you might be able to turn an unworked lead into something that could be business for you. So some of the things I want to make sure that you are focused on in all of this: be consistent, be energetic, be positive, and be dynamic. Nobody wants to work with somebody who is Eeyore, right? And low energy, and well, things are kind of tough right now. You're not gonna attract like a magnet like you want to be, right? People love energy. So let's talk about the buyer's consultation. Buyer's consultation is probably the most important thing you can do when you get a lead. So let's say somebody saw you on social media, met you at a networking group, part of a, social hobby group with you, and they've decided, I want to work with you. And now they say, you know what, I'm really interested in buying a home. We've got about 6 months or so work left on our lease, and I don't know where to start. And you're over here going, neither do I. Let's fix that right now. So this is just a quick version of the process of going from lead procurement to closing day. So contact, meaning you've had a really great conversation with somebody and they say, you know what, I think I'd like to buy a home. You're going to set up an appointment. And I've put in front of you here a buyer lead and introduction checklist for you. And what you're going to do is you're going to set up a professional appointment on your terms. So that could be meet me in my office. That could be let's meet at a coffee shop. Whatever the terms are, they're your terms, not theirs. Could you imagine if I called my accountant and said, you know what, Sunday at 4 would be a really great time for me to get together with you and talk about my taxes this year? Probably not gonna happen. I'm gonna call their office and ask, what is your availability? And let me work my whole life around it. So you're gonna set up a professional appointment and you're gonna go through the process. So what is the process? On that handout in front of you, it shows you a few things that you're going to be discussing. So what are you going to be talking about? You're going to be uncovering their needs, their wants, their motivation, their urgency. You're going to be discovering deal breakers, right? But you're going to be putting all of this information together so you can help keep them focused. And you really want to get beyond just the superficial. Well, why is it that you want to live in this zip code? My kids go to that school. Is that the only reason? So tell me more about that. Those words right there will uncover more information for you than probably anything else. Tell me more about that. Tell me more. Tell me more. And keep saying that. Tell me more. Because what you want to do is get down to what is really driving them. Because once you understand their why, but you more importantly help them understand their why, you're going to be able to keep them focused. I've seen window shoppers. Everybody knows that term, window shoppers. I've seen window shoppers go and see 60, 70, 80 homes. Could you imagine? Could you imagine? That's a lot of time and a lot of doors to open. It's not worth it. So you're going to set up this professional appointment and go through those steps that I've got listed there for you on how to uncover needs, discover what's really important to them. And you're going to qualify them. I don't mean qualify the way that the mortgage loan officer partner you're working with will qualify them. They're going to be talking about debt to income ratios and payments and down payment and all of those things, cash to close. You're going to qualify them. Are they window shoppers or are they home buyers? Okay? If they're not there yet, it's really not worth wasting your time, your energy, your gas. Could you imagine giving up time on your family every single weekend, driving all over town just to find out that somebody's just checking things out, right? Now, most agents skip these two steps. Let me move that down. They skip the appointment and they skip qualifying. And guess what happens? Very low lead conversion. Very low. I think that by setting up this appointment, saying, this is how I work. Let me give you an example. Let's say I'm the realtor and I sit down with somebody and I say, I want to talk to you about the local market. I want to share with you some stats of what you're looking at. I want to prepare you that there's not a whole lot of inventory. Actually, this is the lowest inventory we've had in X years. There's 10 buyers for every house listed, or whatever the actual stats are. NAR, National Association of Realtors, does an amazing job sharing some really quick stats on a weekly email that you can pull out, not only for your local community through your local ORA, regional real estate organization, but also through your state and national. But if you sat down and you went through how I work. So how I work is, I'm usually available anytime between 8 a.m. and 6 p.m. And at 6, I'm usually with my family. And at that time, if it's beyond 6, it would be best if you text me first. So if I didn't say that and you're blowing up my phone at 8 p.m. and I don't call you back until the next day, you're mad at me. But if I have set some boundaries and said, I am available until 6 p.m. And then after that, text me and I'll be able to respond as soon as I can. They're elated if you text them back at 7, right? Because you've set some boundaries and you've actually gone out of your way to help them. So don't skip those steps. This is where now you can start selecting the right properties. Here's where I feel a lot of agents also fail. They fail because they allow the buyers to just send them listings from Zillow, Realtor.com, those kinds of places, and say, I want to go and see these houses. And then the agent's running all over town showing them homes that actually don't fit their criteria. You said you needed to have 1,800 square feet. This home is 1,600. Why are we looking? You said you had to have a pool. Is this now a want and not a need? Hey, this is outside of that school district. Is this something that we should really be looking at? Do you see how you could really eliminate, help keep them focused, and help protect your time? So that's the selection process. Because in the appointment and through your qualification, you have discovered what's most important to them. And you've made it a list for you and for them. And then the demonstration. I love it when I watch HGTV and I watch a realtor go and show a home, and they walk in and they go, this is the kitchen. Yep, you're absolutely right. But how about if we talked about the features and the benefits? Hey, Julie, I couldn't help but notice this beautiful, picturesque, large window over the sink that shows your entire backyard. You can see end to end of your pool, so you can always keep an eye on your kiddos. Isn't that an important feature for a mom with young kids? Yeah. So pointing out those things that are really important, and then listening too. If you walk in, especially if it's a couple, they're talking, right? If they go, oh gosh, I didn't realize this kitchen was a galley. I hate a galley kitchen. Now you know the next time they say, hey, we want to go see this house, you can say, it's got a galley kitchen. Are you intending on, renovating the kitchen, right? Oh gosh, no, we don't have that kind of money. All right, well, you told me how important a kitchen is, and you hate galley kitchens. So is this one that you want to see? And then demonstration, demonstrating everything that's on their needs list and even those things that hit their want list. Okay, this will help you get to the contract because you have met their needs. Do you know the number one complaint that I've heard and I've also read is the number one complaint when buyers are talking about their realtor? They didn't hear me. They didn't listen. I think it's because they skipped the appointment, so there's actually no conversation about needs and wants. They just go meet somebody in a driveway and open a door. So there's not an actual professional process built in, and they didn't provide the proper selection. So if I'm sending a whole bunch of realtor and Zillow leads, listings to my agent, and I show up and I go, oh, another galley kitchen, whose fault is that? So this is where you have to help them in the selection process. And then they really feel heard. You heard me say, I hate galley kitchens. That's cool. Thanks for noticing that. I don't want to waste my Tuesday night going and looking at another house that's not going to meet my needs. So what happens after a contract, hopefully? A closing. You get to closing. So how do we make this happen? First, let's talk about how I work. So this is part of your professional appointment. So there's 5 steps. I've broken it out into 2 slides here. So the procedure is control the process. You meet on your turf. You explain the process. You're going to explain how you work. You're going to explain how it is to buy a home in this current market. There are some people that might believe in this market that they can write an offer for $50,000 under list price. And they don't get that there's still multiple offers because of very low inventory. Now, somebody might be listening to this recording in a couple years and the market will really shift. So that may not be the case, but the point I'm trying to make is if you don't know what the current market is, if you don't know how you need to behave as a buyer because nobody's told you, you're a professional realtor, how do you know how to show up? So it's up to you to show them how to be a strong buyer in any market. So you're going to explain the process. You're going to go through that needs analysis. Again, that is a great handout there to help you. It's got a set of discovery questions in there for you because you're going to discover their needs, their wants. You're going to identify their actual requirements and their deal breakers. If a deal breaker is, I have to have that 4th bedroom, do not go show them a 3-bedroom home unless it has a bonus room, an office, something that could be that 4th room, right? You're going to educate in 3 areas. You're going to educate for the local market, working with a professional, and right there, you have separated yourself from probably 96% of any other realtor out there. Should that bring you confidence? Yes. And you're going to explain how you work so you can have some boundaries in your life. The most difficult part, I believe, of being in this industry is trying to find balance with your time. A lot of people have to wait until evenings to go look at properties, weekends to go view properties. And if you're working all day, every day, throughout the entire week as well, how do you have any kind of balance? So you've got to set up some boundaries here, and that's how you do that, is the how I work. And then you're going to explain the process of buying real estate. In this market, you cannot come in $50,000 under. We're not even going to be considered, and you're going to be wasting your time. And I know your time is so valuable. So let me explain how this market works. And you could show them list price versus sale price for some comparable homes in the neighborhoods that they're looking at. Look, they're all selling within 98%. Hey, they're selling 100% to 102% of list price. This is really important data for them to know. And do you look professional in presenting it? Absolutely. And then the pathway to homeownership. You would not believe how many times I've heard agents say, I've been showing Cecile properties for 4 months. She walks into this brand new home community, fails to say she's working with the realtor, and she's in a contract. She just bought a $450,000 home. And you're cut out. You're done. Think of the time and the energy and the gas, and it's not worth it. So make sure that they know you don't pay my commission. The seller pays the listing agent a commission and they share it with me. But should you ever walk into an open house, into a new construction community, into some place where I'm not around, you let them know you're working with a realtor and you have a partnership with me. And you feel free to share my card or my name, okay? The next step is qualification. So you're not qualifying for their ability to purchase, per se, with credit score and down payment money and those kinds of things. Your lender partner is going to do that. You need to find out their financial, as far as like, hey, do you have a job? Do you have income? Their emotional and their urgency. That's what you're going to be focused on. Some people are not emotionally equipped to go through this process. I'll just tell you that. This is a hefty process. And then there is a contractual agreement. I like to call it an honor agreement. Some companies call it a buyer's agent agreement, where you say, hey, I'm going to be 100% committed to you. Will you be 100% committed to me? And have them sign something that says that. Your brokerage likely has that. So ask them if they have a contractual agreement. If you don't feel comfortable with that, you could literally do it as a handshake. A lot of people still honor their word and will have integrity with saying, yes, I will work with you. Okay, so for the needs analysis, you're going to start with broad, open questions. So describe for me your next home and let them just talk. And if they only say a couple things, oh, like ranch style, 3-bedroom homes, what are we going to say? Tell me more about that. Tell me more. And you're going to have them just keep talking and talking until you have a picture in your mind, and ask clarifying questions. I want to give you a quick example. I saw where somebody was talking about an entertaining kitchen. To most of us, an entertaining kitchen might be a really open concept, right? Where it flows into the dining room and the living room, and you can see what's going on in the pool in the backyard. To this one particular person, an entertaining kitchen meant behind other walls and separated from everybody else, because you know what she does? She's so fancy. She hires people. So she's got a company come in and cook the meals when she has parties. So she didn't want the distractions of the kitchen noise and mess to be seen for her guests. Wouldn't that be important to have clarifying questions to know what she means when she talks about an entertaining kitchen? What are some things that you want to duplicate in the prior home you've lived in? Not prior home you've owned or rented, because if you say rented, they're going to think of just their most recent like homes or apartments. But what if there's something that they loved about their parents' home? Right? So what would you like to duplicate and what do you want to avoid? Those are really important questions to be able to narrow in what's most important for them. Okay, so let's jump into the contract terms. Now, there are certain things that you have control over when you are presenting an offer. And these would be things that would be really important to even go over with your buyer, because what's gonna happen is you're going to present them with an offer to DocuSign, right? To electronically sign to be able to present to the listing agent. They're not gonna read it. They're probably doing it off their phone while they're making dinner, and they have no idea what any of this means. Especially if you're working with a first-time home buyer, but just part of your professional appointment, go over what you have control over and let them know everything else is set by attorneys that wrote it for your state, right? So you absolutely have the option of what you're putting in for the price. EMD stands for escrow money deposit. A good rule of thumb is at least 1%. If you put down 1,000, it might signify that your buyer is not too serious about this offer. Your closing date. It would be most important, if you're putting together an offer to present, that you ask the listing agent, what is most important for your sellers? Do they need to close very, very quickly? Or do they need some time to pack and to move and maybe to find their next home? If you can accommodate the seller's closing date, even if you're not the highest price, you just saved a lot of stress for that seller who's like, most buyers are writing 30 days. I don't want to close in 30 days. I need 45 to 60 days to figure out where I'm going next. And now I'm going to put everything I have in storage or put it in a pod. It's going to cost me extra. Where do I stay with my dogs, right? You can eliminate a lot of stress for them by knowing what's most important for them for that closing date. Your finance commitment date. Remember that story I'd shared with you about losing that relationship because she didn't have enough of a finance commitment date? There are some lenders that will be able to get what's called a TBD approval. So they can get a full-fledged underwriting approval on the buyers in advance of going into a contract. That is important. That will be one of those things that helps you stand out when you go to present your offer, but it also expedites this commitment date. Now, in the state of Florida, a couple of years ago, the definition of a loan commitment changed, and it now requires not only underwriting approval, but also the appraisal in to satisfy that loan commitment. It used to just be the loan approval. So talk with your lender partner and ask them, how much time do we need to have to best protect our client with the finance commitment date? Usually 20 days is more than enough time. But if there's a standard or requirement in your office, please talk to your broker or your admin about that to find out what would be most important there. Inspection dates. Most people default to 10 days. If you really want to be aggressive and stand out, I would encourage you to put inspection dates of maybe 5 to 7 days and have a couple of inspectors ready to go. Because if one says, oh man, I just left to go to Costa Rica for a week, you've got to have a backup. But they might not be able to get out and service that area if it's far outside of their geographical base, right? Financing. A lot of times when sellers are looking at an offer, they are comparing down payment. So if you've got somebody who's got 3% or 3.5% down versus somebody who's got 50% down, you may not look as strong. So this is one of those things that if you do have a high amount that you're financing, have something from the loan officer that helps strengthen the conversation. What I love to do is be copied on the email when the offer is being presented to the listing agent. That way I can reach out to the listing agent. I usually respond by email and I pick up the phone and I say, hey, great to be introduced to you. I wanted to just take a moment and share with you about these buyers of your listing at 123 Elm Street. Do you have just a moment to talk? Yes, of course. I wanted to let you know that we took the extra steps to go ahead and get them not only pre-approved, but fully underwritten prior to even going into contract. So all we need is clear title, a survey, an appraisal, and insurance. But everything on them has been completed. We just need the property documentation. So you could also, and I say this often too, they're first-time home buyers, so they are taking advantage of just having to put down 3%, but I have fully documented everything, and they are very, very strong. They're solid, solid buyers. That will go a lot further than somebody who's working with, some online mortgage company with 30% down. Concessions. If you're asking for concessions from the sellers, prepare your buyers that will be something that will likely be negotiated. So the word concession means we're asking for something of somebody else. So seller paid concessions is a really important thing that may be negotiated. So you might ask for 3% seller paid closing costs. And let's say it's a $300,000 deal. I can do the math really easy in my brain. You're asking for $9,000 in closing cost assistance from the sellers. They might counter back and say, we'll do $5,000, right? So you've got to prepare your buyer that might be something you can try to slice off, but you've got to know what your limit is. I've got a buyer right now that is getting down payment assistance. That down payment assistance is covering just their down payment. They literally have nothing left for closing costs. So unless we get the sellers to pay their entire closing costs, they are not buying a home. The agent knows that. There's no negotiating there. We can't slice that from $9,000 to $5,000. Does that make sense? Okay. And then any contingencies. Do they have a home to sell? Do they have to start a new job? Is there something contingent upon that approval that would be really important to have that conversation with your buyer about anything that needs to have a contingency. If they need to sell their home and you don't write that contingency in the contract, you are risking that escrow deposit, and the sellers could sue to perform. And you're like, we can't. They didn't sell their home. You missed that. So always, always, always doing your discovery with your buyer, ask them, do we have to sell a home? Now, if they come to you and say, I'm buying my first home, obviously we don't have that contingency. Okay, so now let's dive into overcoming obstacles, because there are a ton of them. And this is where I feel like most agents, okay, now I feel a little bit, comfortable with how to procure a lead. Now I feel a little comfortable with how to talk to them. You've got a little bit of a checklist there to go through on asking those discovery questions, finding out their urgency, their motivation, their timeline. And then you've gotten them pre-approved with your lender partner, and now you know exactly where we should be shopping, right? So you've set them up on an MLS search. You are demonstrating and helping to be very selective with the homes to protect yours and their time. And now you've gotten in a contract. What happens when there's obstacles that arrive? Because there are always obstacles that arrive. Sometimes it's of our buyer. It's fear-based. I don't know. I'm hearing right now that it's a really bad time to buy, that interest rates are really high, that there's going to be a crash. I don't know if the economy is going to continue. I'm not sure if I'm ready to buy a home. I don't know if I'm confident to be a homeowner, right? A lot of times it's fear-based. A lot of times they're not approved. I got a lead over the weekend. I called her on Monday, and she was at work. Thankfully, she talked to me. And she said, well, I'm going to go look at a home at 5 o'clock tonight, and if I like it, then I'll work on the approval. And I said, okay. Usually it's the opposite, and this is why. What if you're going to look at a home? And I said, what is the list price? And she said, $250. I'm like, wow, there's a home for $250. She said, I'm going to go look at a home for $250. And I said, okay, well, what if there's a home for $250 that you go and look at, only to find out that you can only qualify for $200? Every time you go to look at a home that's $200, you're going to compare it to the $250, right? Because that's the standard you set. That's like driving a Tesla, test driving a Tesla to find out you can qualify for a Corolla. That Corolla could be great, and it could be sparkly and new, and it could have that new car smell, but it's no Tesla. So we've got to make sure that they're approved. It turns out she has a 400-something credit score. She has $5,000 to her name, but my mom could co-sign for me. And I said, not unless we get your scores up. I know when you buy a car, you don't have to have any kind of qualification if your co-buyer or co-signer is strong. In the real estate industry, if you don't qualify, somebody else's qualifications don't help you qualify. You still have to qualify with that minimum credit score and credit history. So sometimes they're not approved. And a lot of times, people have guidance from other people. So when you're going through that discovery with them, you're going to ask, who else is going to be part of this decision-making process with you? If you're working with young adults, a lot of times they've got guidance coming from a caretaker or a parent. Maybe you could say, can we invite, dad is going to be walking me through this. Can we invite dad in to have a conversation with us? Have dad there at that initial conversation, that initial needs discovery. And then dad's got trust in you because you took time for his daughter or son, right? So find out where they're getting information from, because that could be an obstacle for you. They could be hearing wrong information from people, so you might need to stop that. And current day, the biggest obstacle we have is unaffordability. Last week, I think I did about 15 loan applications, and I think 2 might be moving forward. And the reason being is the median income can no longer buy the median priced home. I don't know if it's the first time in history, but it's the first time in my history of being in this industry that has happened. So somebody earning $50,000 a year, they're qualified for a home in a price point that doesn't exist anymore. It's unfortunate. So unaffordability is an obstacle that a lot of people are facing. So I want to take just a few minutes, share with you the obstacles on each loan type, okay? We're only going to talk about VA loans, FHA, and condos, because those are where most of the problems kind of seep up. If you're working with a VA, a veteran, a VA loan, and just so you know, only the veteran and their spouse or a surviving spouse can get a VA loan. Okay? So if somebody says, oh, my dad served in the military, maybe I can use his eligibility. Nope, it doesn't work that way. There is a loophole to this first thing. And I say no cosigners because 99% of the time, that's how it has to be. The only time somebody can be a cosigner to a VA loan that is not married is if they have a substantial down payment. So let's say the veteran is engaged and they're not married, but her fiance is going to be putting down 20%. I don't know why you do that against a VA loan when you could get 100% financing, but that's the agreement. If the fiance is going to put down 20%, fiance can be a cosigner on the VA loan because there is, skin in the game, right? The VA does that because they don't want any veterans to be taken advantage of. But if there's a large contribution from somebody, we can't do it at a local level. Every single lender literally has to send that off to the VA to have that situation approved. So that's why I say no. Isn't it just easier to say just the veteran, veteran and their spouse? No peeling paint. The house could be 1 year old. If there is peeling paint, that's a problem. So no peeling paint at all, no matter the age of the home. WDO stands for wood destroying organism. It's a termite inspection. It is required. It is required on VA loans. No other loan program requires it except for VA loans, and it must be clean. So no mold, no evidence of active termites, and if there was termite damage, it needs to be remedied. No broken windows, no watermarks or evidence of stains of an old roof. Even if the roof is brand new, the past roof leaked, you got to get rid of those stains if you see stains in the ceiling. All appliances must be in working order, even the burner. Burner on a stove, every single one of them have to work. The HVAC, that's heating, ventilation, and AC. The HVAC system, water heater, water pressure, there's pictures of that. Okay, so all of those have to be, they're tested and they have to be fully functional. Even fences, sheds, outside things, it all is looked at by the appraiser and the WDO inspector, okay? So if you've got a shed that has a rotted out floor, remove that floor. Throw in a new 4x8 or whatever, okay? Loan obstacles when it comes to FHA loans. This is really important because most new agents don't know this. FHA has what's called a flipping rule. And I don't know why this is still in existence, but everybody remember the financial and economic global crisis that happened in 2008? Because of that, this had come as a rule slightly after because there were a lot of people flipping homes. So if ownership has changed, an FHA loan cannot go on it in the first 90 days. If you have a listing, make sure you know that. If ownership has changed, you cannot put FHA as a loan type that you can accept, okay? If the sales price has more than doubled, so I bought a home that I'm gonna flip and renovate, I bought it for $100,000, I put $100,000 into it, but I'm gonna sell it for $300,000. It's more than doubled. And if it goes under contract in that first 6 months, you have to have 2 appraisals, and that second appraisal your buyer can't pay for. So somebody has to agree to pay for it. So you knowing this, you can make sure that the seller knows that they're gonna pay for it. Or ask the listing agent to pay for it because they accepted your offer. I don't want you to pay for it though, okay? But the buyer cannot pay for it. If our buyer has had more than 3 jobs in the most recent 2 years, they have to be in their current job for 6 months. Can I tell you I learned this the hard way? I didn't know until we went into underwriting. It was early in my career, and that was embarrassing. And so I want to make sure you know it too, because if you got somebody who, is kind of job jumping, if we're going to go FHA, they have to be on the current job for more than 6 months. A lot of loan officers don't know that, especially newer loan officers. So if they're like, oh yeah, my cousin Bob is going to be doing my loan. If they're in FHA, call Bob and say, does our buyer have more than 3 jobs in the last 2 years? CAVERS is an acronym, and what usually shows up on this is old student loans. If they are defaulted, in other words, they were not paid, they went into collection status, and collections can only stay on a credit report for 7 years. So what if 20 years ago they were in college? If they owe on a federally backed student loan, that is going to show up here and keep us from getting to the closing table. The home has to be safe and habitable. The FHA loan is the only one that requires economic life left on the roof. That means they have to have at least 3 years, and a lot of times we have to get a roofer to go out and certify that, okay? In the state of Florida, it is really difficult to get insurance right now on roofs that are older than even 10 to 15 years old. So if there's only 3 years left, there's likely we're not getting insurance. So we've got to talk about that. No peeling paint if the home is older than 1978, because prior to that, they put asbestos in the paint, and they don't want kids eating paint chips. So if the home is older than 1978, if there is any evidence of peeling paint inside or out, that's a problem on FHA. And one time ever, I had to get somebody to come out and test it. It took 2 weeks. It cost $500. It was terrible, so let's avoid that. No exposed wires or exterior electrical outlets. So let's say an exterior outlet doesn't have that plastic cap. Before we have the appraiser out there, make sure the seller goes and puts one on, a couple bucks from, the big box stores. And then all appliances must be in working order. Right now, I have one. The appraisal came in yesterday. The right burner doesn't work. They have to fix it. And then I have to send the appraiser back out there for $200 to take a picture of a working right burner. No fun, right? The HVAC, that's heating, ventilation, and AC, water heater, water pressure, they all have to be functional. And literally, FHA appraisers have to turn on the faucet and take a picture of it for the appraisal report. All right, let's talk about condos. This is really important for you, right? If you're gonna be listing a condo here. So some loan obstacles when it comes to condos. When it comes to condos, investor ownership can be a problem. Now, it's fine if there's, investor owners, but if more than 10% is owned by one entity or person, it's a problem. It will not be what's called a warrantable condo in the eyes of Fannie Mae and Freddie Mac, and they are the ones that make up the rules for all of us lenders to follow. So if more than 10% is owned by one owner or entity, that would be a problem. That would make it called non-warrantable, and that would require a cash buyer or somebody who's willing to put 25% down and pay a couple percentage points higher on an interest rate. Terrible, right? FHA and VA has to already be approved for that condo complex. So really easy way, you can literally do a Google search, FHA approved condo list, VA approved condo list. Just reach out to your lender partner and ask them to search it and see if VA and FHA have it approved. You can work to get a VA appraisal, approval, and there is what's called a spot approval possible for FHA. That's a lot of work. There's no guarantee. It takes 30 days. But it's possible. So your best bet is just to stick with conventional financing or cash. There are a lot of times restrictions on rental possibilities. So if you're working with somebody who says, you know what, I want to buy a condo and in a year or two I'm going to turn it into a rental and go buy my next home. Say, ooh, slow down. The condo complex, the HOA, that management might tell you that you may not be able to turn it into an investment property. Okay, they have the final say in it. And then they might say, well, you can have it as an investment, but annually only, or no shorter than 4 months at a time. No Airbnb. They might be able to put those kinds of restrictions. So make sure that you're clear on that. There is a reserve requirement. I've had a couple of condos over the years that did not get approved because they did not have proper reserves. So reserves means what's left over after the budgeted cost of doing business, okay? So let's say we are a condo complex and the annual cost of doing business is $3 million. We have to have $300,000 sitting in an extra savings account, or you are not going to get conventional approval. And they want to know how many unit owners are more than 60 days late on their HOA dues. Why is this important? If there's a large or substantial amount of people who are not paying their monthly dues, how are things going to get paid for? How's the lawn going to get cut? How's the pest control? Right? So they want to make sure that it's healthy and people are paying on time. Is the HOA in litigation? I've had a couple close that the HOA is in litigation. It depends on what the litigation is for. And that's one of the questions that the condo questionnaire will ask. Hazard is another word for homeowners. It's the same thing. Hazard insurance is homeowners insurance. Homeowners insurance, liability, fidelity, and if it's in a flood zone, they've got to have that. So all sorts of insurances we look at, which is really, really boring. But the reason I'm sharing this with you is because we have a big problem in the state of Florida right now. Condos that have older roofs are getting renewed with their insurance policy, that master policy that insures the exterior of all condos. They're getting renewed with something that's called actual cost value. So let me explain. If the replacement cost on a building is $50,000, but the depreciated, worn out over time value is $10,000, if they have actual value cost and they only get $10,000, what happens to that $40,000 difference? It goes to the owners. It's called a special assessment. Could you imagine receiving something in the mail that says, hey guys, we have to replace the roofs and we don't have enough money in reserves and it's gonna cost us extra because we don't have the proper insurance and your monthly dues are going up $300 a month for the next 5 years. Sorry. That could strap people. That could drive people into having to sell or worse, foreclose. So it's a really big problem right now. Insurance companies are renewing with actual value and not replacement value if roofs are older than 10 years. How many condo complexes in this state do you think have roofs that are older than 10 years? And if the roof had been budgeted out for 20 years, it's not in the budget to do that right now. It could keep people from getting conventional financing and force only cash buyers. That could cripple your buyer pool. Okay, so I wanted to make sure that you are clear on that. So last couple of things we'll talk about here is possible roadblocks. So you're in contract, you've gotten through all the hurdles of these things with the loan. Let's talk about what might keep you from getting to the closing table. Inspections can be a deal killer. I see it a lot of times. The inspection report comes back with some really hefty or expensive things. The buyer's not in a place to be able to afford it. The seller's like, I'm not putting a dime into this home. I'm not fixing anything. What happens? A lot of times it's a dead deal. You just cancel. And if you cancel during that inspection period, your buyer gets their escrow money deposit back. The appraisal. I had one come in recently. It came in $15,000 under. What do? You have to go back to the listing agent and there's some negotiations that have to happen. Sometimes you split the difference, right? I'll pay a little bit, you pay a little bit. So the seller comes down, the buyer comes up. Sometimes the seller will come down. Sometimes the buyer has to come up, meaning they have to pay that difference between the contract price and the appraised value because their financing is based off of that, okay? Financing loan to value is based on contract price or appraised value, whichever is less. Do you understand that concept? Okay, so if it comes in less, somebody's got to pay that difference. And I've seen it every single different way. So there's no restrictions on who can pay for that difference if it doesn't come in. Now, if you're the listing agent and the loan officer says, hey, the appraisals come in and it satisfies the contract price, please don't go back and ask the loan officer, well, what did it appraise at? Here's why. If it appraised out higher than what your sellers agreed to sell it at, wouldn't that make them feel lousy if they realized they left $10,000 on the table? That would make you feel lousy, that would make them feel lousy, so we don't share it. I share the appraisal with my buyer and the buyer's agent only. The only time I share the appraisal with the listing agent is if it came in low. Make sense so far? Okay. So if it satisfies the contract price, that's all you're gonna be able to tell your seller, and that's all you should really care about. Okay, insurance. I have seen where the roof is too old, we can't get an insurance policy. I have seen where it's in a flood zone. And what's interesting, to get flood insurance, you have to have a certificate of elevation. That comes from the survey company, which is usually towards the end of the process. So you get the certificate of elevation certificate. I send that to the insurance company. What if flood insurance comes back and it's $5,000 a year? You think that would hurt somebody in their approval or even wanting to pay that, every single month in their payment? So I have seen where insurance has kept us from getting to the closing table. CAVERS, that's that acronym I told you about. We didn't know somebody had a $20,000 defaulted student loan, and there's not much you can do about it, because if you go back to making payments, okay, I'd like to get it out of the naughty list and get it off of the default list, what do? You need to set up 6 months worth of repayments, and then we'll take you off that list. We don't have 6 months, you're in contract. The only other option you have is to pay it, or not do an FHA loan, because that's only for FHA. It doesn't happen for conventional. Changes in credit profile. You ever see some of those funny social medias where it shows the agent and it says, meeting my buyers for the final walkthrough, and they roll up in a brand new Cadillac or Tesla or something? Chances are they financed it, and chances are they're not getting approved now because they now have this hefty car payment. So make sure when you're working with buyers, you remind them, you tell them over and over again, because sometimes loan officers don't do a good enough job explaining it. Please tell them, don't quit your job. Don't start a new job. Don't start any new credit. Don't close any credit. Don't make any substantial changes at all. Right now, we're experiencing something that's called a tightening of credit. The economy is kind of looking a certain way, and we're experiencing a tightening of credit, which means things are getting a little bit more difficult to get approved. You have to look a little bit better on paper, maybe a little bit extra in the bank come closing time. Maybe we need to improve your credit score a bit, okay? For instance, FHA, you can have a 580 credit score and put down 3.5%, but that 580 credit score doesn't guarantee approval. Maybe we have to get it up above 600 to get our approval. So even though that's the threshold and the guideline, it doesn't mean that it's a guarantee. So sometimes we have to improve some things to be able to get that. Changes in income or employment. I've had somebody say, well, I'm in the same industry, but I went and worked with another company, but I'm 1099. Well, if you're not W-2 anymore and you were W-2 and now you're 1099, we're dead in the water. So changes in income or employment can really be a problem. Previous short sale or foreclosure. So years ago, these used to show up on a credit report, but it no longer does. The only derogatory event that shows up on a credit report is a bankruptcy. So if somebody forgot to ask or forgot to tell that they had a foreclosure and it's not reported, but it comes up in the process, that could keep us from getting to closing. A lot of times, if somebody has ownership in another property, they may have forgotten about it. Oh yeah, I own this land out in Arizona. I paid $400 a year in taxes. I forgot about it. That would be okay, right? Like $400 a year, most people can afford that and still be approved. But what if they're listed on their mom's condo, right? That happens too. So just being listed on somebody's title could be a potential roadblock. All right. So I want to, and forgive me here, that used to be a QR code. For those in the room, I'll just share with you my QR code so you can save my information in. It's got all my links there, but I do want to remind you and invite you, let's connect on any of the social media. So if you're on LinkedIn, Instagram, I'm on TikTok, Facebook. I've got a YouTube channel that has a lot of videos in there, really for first-time home buyers. So as a new agent, you'll be able to learn a lot in there. And then again, that podcast, Credit Coaching by Christy. And for those in the room, I've given you my business card. And, for those watching the video, you know how to reach me. So thanks so much for being here. Appreciate you.